Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Monday, the 12th of June. I'm Daniel Lam, your host for the podcast. This week, the heavyweight data would be the US CPI on Tuesday evening Asian time, followed by the FOMC decision on Thursday early hours in Asia. Now, back in the days when I first started doing this Cut to the Chase podcast, roughly 10 months ago, these key macro announcements would be major market moving events. However, over the last few months, such announcements, especially those from the US, have not been able to move the markets as much as they did before. Why is that? Well, the US economic data seems to be, quote-unquote, following a script, i.e. it has been slowing, but at a measured pace and beating expectations. As a result, the VIX index, which is the short-term implied volatility of the S&P 500 index, is firmly back at pre-pandemic levels. In fact, if you plot the US Economic Surprise Index and versus the VIX index on the inverted axis, you can see that they are mapping each other almost in tandem. Now let's go micro. On a corporate level, company earnings have been beating expectations. The fiscal expansion back in 2020 and 2021 helped US companies' profitability, and many of the companies have extended the duration of their debt, locking in low borrowing cost. So this ensuing fall in volatility has led to inflow from CTAs as well as volatility targeting funds, which further supports the markets, and therefore low volatility begets lower volatility. So this low volatility environment in the US is likely to support US equities in the very near term, let's say over a 1 month horizon. Like we discussed in the podcast over the last couple of weeks, investors are currently enjoying this comfort zone in US equities, especially in the mega cap technology stocks, which have performed very handsomely for investors over the last decade, and year to date they have also been performing very well. Having said that, VIX is currently at the lower bound in the quietest periods of the prior bear markets. Now, were there to be a change in the narrative, such as the US economic expectations getting revised up, and we begin to see a series of underperforming actual data, that may lead to renewed concerns about US recession, and pressure may return to US equities. So investors should consider slowly locking in some profit in US equities and rotating into other regions, such as Asia ex-Japan and Japan equities. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.